synopsis coming in from the deal street. And joining me right now is Gaurav Sood, who's the Managing Director and Head of Equity Capital Markets at Avendus Capital. Gaurav, good to have you on CNBC TV18. Of course, Avendus Capital, under your leadership, has done a bunch of these block deals. What have been the key drivers, and can you take us through the investor appetite in the block deals for the year?
Good morning, Nisha, and good morning to all the viewers of CNBC-18. Thanks for having me here. So, as you mentioned, blocks have been a key trend for 2023 capital markets. And as you said, about $15 billion worth of blocks have happened. What we saw in a lot of these block trades was that private equities were sitting in with massive returns and significant IRRs, and used the opportunity of high liquidity, both from domestic institutional investors and of late in the last couple of months from foreign institutional investors, to use the opportunity to exit some of these positions. What has been the driving factor in India in the last, I would say, for 2023, has been the fact that even in a market that started with volatility, domestics have been the standout factor for driving this capital market frenzy. Over 160,000 crore worth of domestic net buying has happened, which has resulted both in the secondary market going up. We all know how the Nifty is trading at all-time highs, but more importantly, we saw the primary market, both in terms of IPOs and secondary exits, see strong response from these investors. So the domestic investors were one of the key reasons why such large private equity sales could be absorbed in the market without any impact, and the stocks continue to rise even after these block sales. So it's a win-win situation for both private equity companies who probably could not find these secondary exits in the past, are being able to offload 30, 40, 50% of the companies in the market. And even for investors, they are sitting in the money. So that's a great sign as we get into 2024.
That's right, Gaurav, but a large part of that is also owed to the market momentum. The market has been just so exuberant that the stocks have really come back even after a big supply of shares. Now, what about the startup space? Of course, fundraising has been difficult, but exit opportunities have been immense. And also for the IPO pipeline for next year. How do you see the startup space emerging? Because Avendus has specially nurtured so many startups, and now the ECM play is going to be another level for Avendus. So how are you seeing the startup equity market transactions for the next year?
Yeah. So Nisha, one thing which we saw in 2023 was the fact that some of these most of these new age companies are 40-50% up year to date. And unlike 2021, where a lot of the this momentum in these companies was led by FIIs, this year domestics have been large buyers of the new age companies, and that is giving us a lot of confidence as we get into 2024 that there will be a lot of appetite both from domestic investors and of course foreign institutional investors as they come back to the market. Both of them will drive the interest and appetite for startups. As we talk, a lot of new age companies have started thinking of going public sometime in the next 12-18 months, and are evaluating IPO as a serious consideration because markets are becoming more mature, liquid, and there are learnings from 2021. So we think that there will be significant appetite for these new age companies who are much better prepared this time and are focusing a lot on key metrics like profitability and basically the financial health of the companies. So we think it's a great time to be prepared for the IPO market for 2024.
Right. So IPO pipeline is looking strong. But Gaurav, one question on everybody's mind has been the election time. And that's one of the eligibility criteria, which is also going to move the market. Are we of the view that it is going to be a slow lane till the elections, and after that the IPOs would come in? How do you see the action on ECM trades in the first half of next year?
So at least for the first couple of months of 2024, we do expect the action to continue both on the listed side in terms of blocks, fundraisers through QIPs and selective IPOs. But broader trend is that a lot of companies are now setting the IPO ball rolling. So they are starting the process. They want to file their draft red herring prospectus sometime by the end of the financial year in April, May, so that they are prepared for a window which should arise if we do get a stable government in the center, which should arise post the election. So people are getting in a state of readiness, and we think second half of next year you should see blockbuster listings.
All right, and bigger in size as well, because this particular year had seen very mid-sized company IPOs. That's also another theme. So give us a sense on that, how big the IPO sizes could be, and also the investor appetite. What is it driven by? What pockets of investors are looking keenly in the Indian markets?
Yeah, so as you rightly mentioned, this year the IPO sizes were slightly smaller, and it was probably linked to the fact that issuers were also cognizant. They wanted to get IPOs done, and even if their IPO size was smaller, they wanted to make sure there is scarcity premium. Secondary OFS had also come down because private equity investors also do realize that if the stock does well after the IPO, they can monetize their stakes in after 6 months the lock-in expires. Going forward, we do expect, the average India IPO size is about 1,000 to 1,500 crores, so that should remain. But there will be stories where IPO size could be anywhere between $300, $400 million to $1 billion, $1.5 billion. And there is going to be appetite for those as well. In terms of demand, they will be anchored both by domestics and foreign. Amongst foreign, we are seeing large sovereign funds getting active in the public market space. So that should play out as well. Large foreign investors are playing India very actively on deals, as you've seen in some of the block trades. So that's the pool that will definitely drive. But main thing is that the large mutual funds continue to get more than $2 billion of flows every month, and they do have limited opportunities to invest. So new stock, new paper coming to the market is welcome from a investor perspective as well, especially domestics. So we are in a great shape, and unless we see something major, which we don't foresee, we think the primary market is in a great shape for 2024.
All right. So all the good commentary coming in from US Fed, also election dynamics, all of them have been favorable. Of course, geopolitical situation is something to be watched out for global markets as well. Gaurav, my final question to you. When you look at the next year, the blocks are going to continue, do you think? And what is the private equity stance right now? Because the private market valuations are way different than the public market valuations. So what about the investments by private equity as well as venture capital? How is that going to be significant given the valuation constraint? How big a role will valuation mismatch play? And are the new age companies coming around with the valuations?
So we think that there is a market for both. Public market, of course, is sentiment driven, and there are structural changes that are happening in India, both from an FI and DI perspective. So public markets are expected to remain robust. But we also see that there are a lot of companies on the private side which will find takers in private market at the right valuation. And ultimately, we also do advise to companies that IPO is a product for people or for issuers who are fairly mature, robust, and have a certain scale and size. But some of the companies who are not that evolved at that stage will still find takers in private market at the right valuation, and even larger companies will have an appetite in the private market. So we are seeing large private equity secondaries also at Avendus, as well as you mentioned, we are building our ECM capability. So we are excited on both the products, and we think both are here to stay.
Gaurav, all the best for that. Of course, it's going to be a hectic and very, very fruitful year next year with so much lined up, especially from the new age companies as well, where you hold a significant amount of presence. Thank you so much for joining us. And one of the big takeaways also coming in from the deal makers is that the equity market is providing the currency for more M&A and inorganic expansion. With that, it's a wrap on this particular deal street view and how the next year is going to look like. But we'll slip into a short breather on the show, come back for more on markets and other aspects on news developments. And also joining us will be Parekh from Renaissance Investment Managers. Stay tuned for that.
CNBC-TV18, embarking on a quarter century of excellence.
Thanks so much for watching CNBC-TV18. For all the breaking news and top stories, keep following us on all our social media platforms.